Welcome to the Riskwiser Zone, the show where we dive into the world of finance and explore the latest developments that shape our global economy. I'm your host, Lewis, and I'm excited to have you join me today. We're starting off with a look at the current state of the gold market, which has been experiencing some significant fluctuations in recent weeks. The price of gold has been driven lower due to a combination of factors, including hotter-than-expected inflation data and the confirmation of Kevin Warsh as the new chair of the Federal Reserve. The latest inflation numbers showed that consumer prices in the U.S. rose by 3.8% on an annualized basis, with core CPI increasing by 2.8%. This has led to a shift in expectations for interest rate cuts from the Fed, with some analysts now predicting that there may be no rate cuts at all this year. As a result, the U.S. dollar index has risen, and Treasury yields have increased, putting downward pressure on gold prices. The confirmation of Kevin Warsh as the new Fed chair has also added to the hawkish tone in the market, solidifying expectations that interest rates may not be cut as soon as previously thought. This has resulted in a sharp drop in gold prices, with the metal losing around $100 per ounce on Friday alone. It's worth noting that the ongoing war in Iran and the closure of the Strait of Hormuz are continuing to put upward pressure on oil and energy prices, which could potentially support gold prices in the long term. However, for now, it seems that investors are normalizing the conflict and its impacts on global trade, and gold is not receiving the same level of safe haven buying as it did a month ago. We'll be keeping a close eye on these developments and exploring their implications for the wider market. Will the hawkish tone from the Fed continue to dominate the narrative, or will other factors come into play to support gold prices? We'll be discussing these questions and more in the coming segments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of global markets and economics, where tensions between major powers are influencing commodity prices and central bank decisions. The ongoing situation with Iran has led to a surge in crude oil prices, which rose by 4% on Friday, impacting economies that rely heavily on energy imports, such as Europe and Japan. This increase in oil prices is not only affecting the cost of living for consumers, but also influencing monetary policy decisions. Swaps markets are now discounting a lower chance of a rate cut by the Federal Reserve at its next meeting, while the European Central Bank is seen as more likely to hike rates due to inflation concerns. The Japanese economy, heavily dependent on imported energy, is also feeling the pinch, with the yen weakening against the dollar. Meanwhile, precious metals like gold and silver took a hit, falling by 2.63% and 9.12% respectively, due to the strengthening dollar and rising global bond yields. This move suggests investors are becoming more risk-tolerant and less inclined toward safe haven assets. However, it's worth noting that central banks continue to show interest in gold, with China recently increasing its reserves for the 18th consecutive month. As we navigate these complex economic waters, it's essential to consider multiple perspectives and potential outcomes. The interplay between geopolitical tensions, commodity prices, and monetary policy decisions will undoubtedly continue to shape the financial landscape. Whether you're an investor, a business leader, or simply interested in understanding the world around you, staying informed about these developments is crucial. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a look at the latest developments in the tech industry. We've got a trio of stories that caught our attention, all related to companies navigating the evolving landscape of AI and cryptocurrency. First off, Northern Data AG, or Northern Data for short, has announced its Q1 2026 results. The company reported a significant increase in GPU prices, which had a positive impact on their revenue. However, they also face challenges due to global economic uncertainty and supply chain disruptions. It's a mixed bag for Northern Data, but they're working to adapt to the changing market conditions. Next up, we have Bitdeer Technologies, which has launched its new data center in Singapore. This move is part of the company's expansion plans, aiming to increase its global presence and provide more services to customers. The data center will offer a range of solutions, including AI computing, cloud computing, and cryptocurrency mining. It's an interesting development as Bitdeer looks to diversify its offerings and stay competitive. Last but not least, we have DigiPower X, which has reported its Q1 2026 results with some promising news. The company has generated its first AI revenue through its Mio Cloud's GPU cloud platform, and it holds around $125 million in cash with zero long-term debt. DigiPower X is shifting its focus from cryptocurrency mining to AI infrastructure, and this milestone marks an important step in that journey. As we can see, these companies are navigating the complex and rapidly changing world of tech. They're facing challenges, but also seizing opportunities as they arise. It's essential for investors to stay informed and adapt their strategies accordingly. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.